14 of 21 series are aligned with stagflation mild this morning. That is a moderate level of systematic agreement around a configuration of decelerating growth and gently accelerating inflation pressures in the framework's terms. The current macro regime is stagflation mild, with a confirmation score of 14 out of 21. In this environment, the macro regime reflects growth momentum decelerating at -0.5615 and inflation momentum accelerating at +0.0081. A mild stagflationary configuration where activity indicators soften while price pressures remain resilient in the math. The coherence score sits in a moderate band, and the confirmation score of 14 out of 21 places today in the framework's moderate alignment zone. By our reading of comparable historical conditions, regimes with confirmation scores in this range have persisted in roughly 41% of cases over rolling 3-month windows, with the most common transition in the sample being a move toward acceleration. A description of prior patterns, not what may occur next. Compared to last week's readings, the confirmation profile has held steady in this moderate band, while growth momentum has deteriorated incrementally and inflation momentum has edged slightly higher. Historically, environments like this have felt choppy across markets in the sample, with sector-level differentiation in equities and uneven bond behavior as participants navigate the tension between slowing growth and persistent inflation. Turning to signals, the first lens is Treasury yields. Front-end yields have firmed in response to the Fed's June 17th decision and Kevin Warsh's more hawkish communication stance, while the 10-year remains below the 4.45% trigger that the engine tracks for inflation composite shifts. 1. The rate complex carries a red momentum label on the curve, defined quantitatively by T10Y2Y in an unfavorable configuration as the curve remains compressed and PAM's momentum softens. In our framework's reading of comparable periods, this roughly coincided with pressure on longer duration bonds and episodic stress in rate-sensitive equities within the subsequent quarter. An observation under our methodology, not a forecast. The second signal is labor. May payrolls rose by 172,000, and the unemployment rate held near 4.3%, pointing to continued labor market strength in the Fed's characterization. 2. The framework marks PAMs with a red momentum label, defined mathematically by slowing growth in payrolls relative to prior trend, even as the level remains elevated, and by initial claims, ICSA, moving in an unfavorable direction. In our framework's reading of comparable periods, this roughly coincided with a mix of resilient household income data, but growing dispersion in cyclical equity performance over the following 1 to 3 months. An observation under our methodology, not a forecast. Third, credit and risk markets show a tightening bias. Warsh's lean toward less forward guidance has coincided with higher front-end Treasury yields, a stronger dollar, and increased equity volatility, as markets price an elevated probability of further hikes despite an official on-hold stance. 1. 4. Here the momentum label is red for risk spreads, defined by wider credit spreads, and a firmer dollar that historically mapped to less favorable conditions for levered exposures. In our framework's reading of comparable periods, this roughly coincided with more cautious credit issuance and episodic spread widening within the subsequent quarter, an observation under our methodology, not a forecast. Fourth, the equity and sector tape reflects this macro mix. Overnight, S&P 500 futures sit at -1.42%, NASDAQ futures at -2.80%, and global indices, such as the Nikkei 225, 3.55%, and Hang Seng, 1.82%, are under pressure, while sector rotation shows modest gains in industrials, energy, and healthcare against weakness in materials and gold. The technology complex is being repriced amid headlines about AI risks and China's DeepSeek, with big tech lead sell-off in global stocks framing today's tape. Bloomberg FTWSJ. The momentum label is mixed. Green for selected cyclicals, red for parts of tech, defined by relative strength dispersion across sectors. In our framework's reading of comparable periods, this roughly coincided with choppy, sector-differentiated equity performance over 1 to 3 months, an observation under our methodology, not a forecast. On the conditional map, Two if-then triggers sit on the engine's radar. If the 10-year yield crosses 4.45% and holds for 5 consecutive sessions. In our framework's reading, inflation composite acceleration appeared in roughly 9 of 11 comparable conditions. A historical characterization, not a forecast. In that context, such a move would mathematically strengthen the case for an expansion to acceleration style transition in the regime engine, purely as a description of how past configurations lined up. If the fear and greed index drops below 15 and holds for 5 consecutive sessions, in our framework's reading, deterioration in the confirmation score appeared in roughly 7 of 9 comparable conditions. A historical characterization, not a forecast. Under our methodology, that would mark a more defensive regime watch state, again as an observation of prior environments rather than a statement about future behavior. The map is live. These conditions are being monitored daily across all 21 series. Atlas is the automated, rules-based engine inside Given Analytics. It does 2 things in parallel. First, it publishes a view of the macro environment, the regime, the confirmation score, and the historical base rates we just covered. Second, it runs a fixed 4-layer mathematical framework: price structure, rate of change, risk regime, and market participation, across 407 liquid symbols every trading day. When all 4 layers agree on a symbol, Atlas records it as an upside-aligned or downside-aligned condition under the framework, a reading of how the 4 layers line up, not a trade. These are time-stamped model readings logged for members to study. The environment view and the condition log sit side by side inside Atlas. They are separate outputs. The regime does not pick the symbols, the 4 layers do. Members use Atlas to study how the framework has recorded conditions across prior environments, as historical behavior, not as trade selection. Atlas runs the framework. You study the outputs and environment. You decide what to do next. The framing is potential, educational. The math describes configurations and historical behavior. It does not direct actions. The morning brief is the public surface. The live Atlas dashboard shows the full 21 series regime map, today's mathematical conditions across 407 symbols, and the historical archive side by side. Members study the environment and the Atlas outputs each morning. If you want to track this alongside us, the live view is at givenanalytics.com.